welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and we're here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have our questions and yours addressed by the guests on the show. Before bringing him on board, let's see what the global handover looks like. European markets staged a late rally yesterday afternoon as investors digested the inflation data from the US. Stock 600 closed up by 1%, having earlier hovered around the flat line for most of the session. Almost all sectors and major bourses entered positive territory. US consumer price inflation eases to a better than expected 8.5% in July as lower fuel prices offset rising food costs. Stock surge led by Nasdaq, which gained over 2.5%, while S&P 500 hit its highest level in 3 months. Following a strong handover from the Wall Street, stocks in Asia Pacific trade higher. For our own markets, the SGX trends in the green, indicating a positive start. Stocks in the spotlight today, Tata Consumer, Eicher and Coal India. Meanwhile, hotel stocks hogged the limelight yesterday following strong earnings and optimistic commentary from the likes of IHCL. We assess the sector outlook with MC Pro. Okay, first things first, let's talk about what happened yesterday, and hotels was definitely the flavor. Bharat Gianani joins us now from Moneycontrol Pro to talk about the sector outlook and what lies ahead. Hi Bharat, thank you for joining in. What explains this strength and this rally? Yes, good numbers for the quarter gone by, but is that run rate sustainable?
Yeah, good morning to the viewers. So definitely, if we see the Q1 performance, if we compare it with the pre-COVID levels, it has been definitely strong. So all the parameters that we see, the average room rate, the occupancy, and consequently the revenue per available room, that has been significantly above the pre-COVID levels reported by the major listed players, that is Indian Hotels, Lemon Tree, and EIH, that manages the Oberoi brand of hotels. So there has been the recovery has been, the growth has been much ahead of what the street was expecting. So the street was expecting, if we see like last 1 or 2 quarters back, the street was expecting that the hotel companies will reach the pre-COVID levels by second half of this financial year. But if we see the Q1 performance, it has far exceeded the expectations. So all 3 companies have reported very strong numbers. If you ask about the trend, definitely if we see the segmentation, the leisure demand continues to remain very strong, but the business and the corporate demand has come back in a very big way. So the corporate meetings, exhibitions, events have all started. The business, the offices have started, and consequently the physical meetings to build the relationship factor has started in a big way. Also, an important thing to note is that the foreign travel, which was missing in the last 2 years because of the COVID fear and the restrictions, that will come back in a very big way. So foreign tourists generally come in the winter season to visit India. That's October to March. It's a very strong season. And if you see the pre-COVID levels, the foreign travel used to contribute about 10 to 25% of the demand for the hotel companies. So that was absolutely missing in the last 2 months. So that's an additional trigger that will definitely take the sales much higher. And if we see the second half for the domestic, as far as the domestic people are concerned, also the traveling is very high in the second half because of good weather conditions. So overall, H2 is a seasonally strong quarter, and we expect a further improvement from the levels.
Okay. Bharat, what about companies which have good exposure and good presence in foreign locations as well? Yes, Lemon Tree has done well because domestic demand has been very, very strong. Second half, we're yet to see how much of the pickup really reflects in international travel. But what about players like IHCL, EIH with a significant presence abroad as well? Because this time they lagged domestic players. Will that pick up, or will that also revive in the second half and beyond?
Yeah, so definitely that factor is also there. If you see IHCL and EIH, they both have a significant presence overseas in markets such as Middle East, US and UK. So if you see the IHCL numbers, the international travel which was there. I mean, the foreign locations contribution that was very pretty close to the pre-COVID levels in Q1. So this is definitely going to expected to improve. And important point to note is that IHCL in its commentary stated that the inflationary environment which is there in the US is not really impacting the hotel demand, and the air travel fare, which has also seen a bit of an increase, but that is not really affecting the travel demand. So travel demand after 2 years, the people have started to move, and this will continue to remain strong. So we expect IHCL and EIH on back of a good recovery in the foreign locations as well to perform better going ahead.
Do you at MC Pro have a pecking order of what kind of names you like from the hotel and hospitality business?
Yes, so we definitely are positive on all the three listed players that we cover. But in terms of our packing order, IHCL would be the first preference. Then we would prefer Lemon Tree Hotels and EIH in that order.
Okay. What about outlook for the next couple of years? Because yes, second half relatively is stronger than the first half of the year, and we will be watching out for numbers and the performance. But anything that stood out in the commentary which gives long-term visibility of these companies in terms of their performance, in terms of demand?
Yeah, so definitely, if you see the important point is that if you see the listed players' capacity addition, it's pretty high. So if we see the pipeline that they have, IHCL, for example, is adding 40% of the current total inventory which they have. That's the addition pipeline that they have. If you see the plans of Lemon Tree Hotel, they are adding about 30% of the rooms of the current inventory. So definitely they are anticipating a very strong demand. That is why the room addition pipeline is there. Also, if another important factor is the favorable demand supply dynamics in the hotel industry. So if we see the demand is, as I said earlier, because of after 2 years of virtually no of lesser travel, people have actually are bound to travel more, and so demand is expected to remain pretty strong. On the other hand, if we see the supply side, a lot of smaller players had been severely affected in terms of COVID-19 in that times, and they had to shut down the shop. So the supply is a bit of a constraint, and if the players plan to add new supply to the system, it will take time. So if we see the demand supply, demand is going to be significantly better than the supply. So this favorable dynamics will help the players who have survived and who have strong balance sheet, as I earlier pointed out, the listed players. So definitely that is going to help them a lot.
Is that a trend, Bharat, that you're tracking across these reopening trades, whether it's QSRs? I know you track that segment. You track a fair bit of discretionary retail as well, perhaps media exhibition like PVR, Inox, etc. as well. So is that a trend you've been seeing across the board, or is hotel the clear outlier, the clear outperformer when it comes to reopening plays?
Yeah, so in the discretionary space, we have seen that in the QSR segment as well as the footwear segment, the recovery has been good, and they have very strong growth plans. If we see across the entire retail space, if we see the growth is there. Definitely, some categories like apparel are currently being affected because of being discretionary in nature. But if we see the long-term trend, the one big point is that there is a lot of shift happening from unorganized to the organized segment. So in near term, there might be some impact for select segments. But in the long run, if we see the organized penetration is very less. I mean, if we see if we take groceries, it is like 4 to 5%, and if for apparel, it is like 30-35%. So there is a lot of potential to gain market share from the unorganized segment that will play out in the next 2 to 3 years. And if we see the aggressive store expansion plan of every player in the retail segment, be it footwear, be it QSR, be it apparel, they have very strong growth addition plans. So the long-term prospects remain good on the retail space. So we are positive on the prospects of the retail segment.
Okay, all right. And I think you said IHCL is the preferred pick, following by Lemon Tree and then EIH in the pecking order. All right, Bharat, thanks much for joining in and helping us out. But before we let you go, I just want to understand, do we still have Bharat with us? Okay. Yeah. Bharat, I just wanted to understand what are the big triggers that one should look at while assessing the growth outlook and while tracking the growth of these stocks? And are there any downside risks that you foresee?
For the hotel space?
Yes.
Yeah, downside risk is, I mean, I don't know if a COVID-like situation kind of comes back, but I mean, that's a very less chance of it. Really, other than that, there is no downside trigger as such. Upside trigger, the margin structure is also very good for these companies. And with the demand coming back strongly, I think the industry is on the upcycle for the next 2 to 3 years. So all the listed players will definitely benefit from that.
What about the downside risks?
The COVID-related risk, if it comes out, that's the only risk that we kind of foresee. But or any other socio-political crisis is there, like Russia-Ukraine thing happened. So that if that kind of comes out, that's obviously a very unforeseen event. So if that comes out, that could be a downside risk as well.
All right. Thanks much, Bharat, for joining in and helping us understand the hotel sector in detail and what lies ahead, what are the big triggers to watch out for, and of course, the risks to keep on your watch list. Let's talk about what are the stocks that could be in the limelight today. Let me flag them off one by one. First up, earnings candidate, actually, we're in the last leg of the earnings season. A lot of heavyweights still reporting their numbers. I want to flag off a Tata Consumer Products. If you look at the Q1 FY23 numbers, their profit jumped 38% YOY, coming in at 277 crore rupees. The revenue was up 11% year on year. 3,327 is where it was what was reported by the company, and EBITDA increased 14% YOY. Coming in at 460. So a healthy set of numbers, I believe, from Tata Consumer Products. Of course, as soon as our technical expert joins in, we will help you understand how the stock will also react. There's also Eicher Motors that could be in the limelight. Q1 profit surged 158% year on year, coming in at 611 crores. Of course, this was the low base effect kicking in. Do remember, in the same quarter last year, the Q1 of FY22, a very difficult period, not only for people battling COVID-19, but also for India Inc. So there was a massive downtrend in demand, a massive disruption in terms of supply chain, in terms of demand, in terms of semiconductor shortage, etc. So yes, it was an exceptional quarter, and it was a very, very low base, which Eicher has to work with this time around. So close to 160% uptick as far as bottom line is concerned. Revenue jumped 72% YOY, again low base effect kicking in here as well, coming in at close to 3,400 crore rupees. Let's see how Eicher Motor reacts in trade today. Moving on to the third name on our radar today, Coal India. Q1 profit has jumped 178% YOY, coming in at 8,834 crores on a low base. Revenue was up 39% YOY, 35,092 is where it was perched at. That's the three stocks we have on our radar, still awaiting the guest to come on board. SGX Nifty, meanwhile, looking very, very strong. 17,740 is where it's perched at right now, up almost 200 points as we speak, up 1.1%. Let's see how the markets react to that. Do we have the guest yet? Okay, we're still waiting for the guest. I guess we'll have to wait for another few moments before he joins. I'll quickly do a check on Asia markets in the meanwhile. Firmly in the green. Okay, firmly in the green. Shanghai, Hang Seng, even Kospi actually trading with a gain of more than 1%. Okay, Chandan Taparia is with us now from Motilal Oswal. Chandan, thank you for joining in. Talk to us about the trade setup today, weekly expiry, and I'm sure you are going to have a busy, busy day. What should we as traders, investors look forward to?
Yeah, thank you so much. So for us, the Thursday is like the festival because of the weekly expiry, and the good part is we rule the day. We are having good command on it and definitely going to enjoy the day with the festivity. So talking about the Nifty first, we were continuously talking about key support at 17,442. And yesterday exactly it made low near to the same. And we were having the long pending target of 17,777. And recently I've done a story with Moneycontrol where we have given the target of 18,500 by this Diwali. So I think the cheerful days are not far. We believe that overall 17,444 could act as an immediate support to extend the move to our 17,850 to 18,000 on immediate basis and then 18,500 on positional basis. Similarly, talking about the Bank Nifty index, it took good support near to 37,250 and then support shifted at 37,777, 38,000. So with this cluster of the support, Bank Nifty is all set to head to us 39,500 to 40,000 marks over the next couple of weeks. So we are having the positive to range bound bias with buy on decline stance in the market going forward. Now looking at the stock specific, the question is that then what to deal and how to deal in this market. So one can go with selective auto name. So we have positive view on the counter like Tata Motors. The stock is continuously making higher tops, higher bottom on the weekly scale. And after the consolidation of last 5 to 6 trading session, yesterday it witnessed uptick with taking support at lower zone. So recommending to buy on Tata Motors and expecting here to rally to us 485 to 490. Apart from that, BL is on radar. We have seen that most of the capital goods and the defense related companies are adding good built up of long position with consolidation breakout. So BL is the other name where we are keeping radar with support of 273 and here we are at target towards 300 plus. So Tata Motors, BL, Tata Steel and selective banking counters could be on radar for the day to cheer up the market towards 17,777 marks.
Okay, all right. I was just flagging off to our viewers before you joined the three stocks, the three heavyweights that delivered numbers yesterday. One was Tata Consumer, the other was Eicher, and third was Coal India. All three after the markets shut for the day. Talk to us about Tata Consumer first. It's slowly and steadily and strongly inching back to its April highs. Will it surpass those levels, 820, 830 odd, or will there be some consolidation before that happens?
Yeah, so you talked about three names, Tata Consumer and other. So I'll give more preference to other, but yes, Tata Consumer is giving good risk reward ratio because most of the FMCG counter were stable in this entire recent market volatility. Only the concern that Tata Consumer failed to surpass the hurdle. Technically, a couple of days back, it formed a double top kind of formation near to 825 and then drifted lower. Now that negative pattern is negating with basing formation near to 780 zone. So here we can go for buy stance with support near to 785 and expecting it to once head to us 810 to 815 kind of levels.
Okay, what about Eicher and Coal India? How do they look on the chart?
Yeah, so comparatively more positive on Eicher and the Coal India. So first let me talk about the Coal India because good open interest activity is seen in the stock. This stock is continuously making higher tops, higher bottom from last 6 weeks and supports are gradually shifting higher. So this stock has surpassed the key hurdle and base is shifting higher. So here one can look for buying activity with support of 208 and look for a move towards 225, 230 level. We have positively on the auto name and Eicher is one of the counter which is showing the strength. However, we are consolidating in a range from last 15-20 trading session. But now it seems that the stock will surpass the immediate barrier of 3180 to 3200 to extend the rally towards 3500 marks. So positively on the Coal India followed by Eicher and then Tata Consumer.
Okay. Let's talk about some questions that our viewers are asking and they want you to answer for them. First up is a query on Balram Porcini. Parth has written to us and he wants your view. Last 1 week, quite weak because of the higher sugar prices. There's no respite yet from the government as well. So clearly the stocks have been reacting to that. And yesterday also Balrampur was down 6%. Talk to us about the way forward. Which way is it headed?
Yeah, so we are on festival season, but it seems that momentum in sugar stocks are missing. If I look at the technically, this stock is forming a bearish pattern. So I think this festival, we need to add more happiness as a sweets. I'll avoid Balrampur as of now because the stock has measured support near to 330 marks. And yesterday it closed near to the same. So that is the reason not getting any conviction. Let it go to around 300, 310. Then I'll get conviction to buy the counter. Otherwise, I'll look for further decline and wait and watch mode in the counter.
Okay. Trilok has written to us and he wants your view on SBI vis-a-vis ICICI Bank for the short and long term. If you look at the 5-day chart of these two counters, they've both moved in opposite directions. So tell us which is looking more stronger right now.
Exactly, we always believe the study of the RRG and the relative strength. And ICICI Bank is always the preferred pick, whether you talk about entire banking space or even if you compare the PSU versus private or private versus private. So ICICI Bank is one of the leader and price performance is clearly visible. Stock is quoting near to the lifetime high territory and heading towards the new zone. So I think this consolidation breakouts and fresh momentum could take it to us 900 zone soon. So ICICI Bank is one of the strongest counter comparatively. So one can look for buy on decline stance with support near to 825 for target was 888, 900 marks. Now, if you talk about SBI, this stock was seeing the good momentum. It has seen good momentum, but recently it is making lower top, lower bottom. So let it come near to 510, 505. Then I'll go for up move towards 540 zone. So more strength in ICICI Bank. SBI needs some breather for test of the support zone to again start the next leg of rally.
Okay. All right. Next query is from Ray's. I'm sorry if I'm mispronouncing your name. But can you tell us what is the way forward for Maruti Suzuki? You said you're bullish on auto stocks. Is Maruti also one of them?
Yeah, so we have bullish view on most of the auto companies, whether you talk about TVS Motor, M&M, Eicher Motor. Yes, we have view positive on Maruti, but some profit booking was seen in last 5-6 trading session. Recently, it made high near to 9,200 and witnessed correction to 8,800. So I think this recent decline could be end soon. And with support near to 8,500, we'll pick the Maruti for 9,200 and then finally target of 10,000, which is the lifetime high territory for the Maruti.
All right. Okay. Guys, unfortunately, that's all the time we have to address your queries. But Chandan, before we let you go, why don't you tell us what are your own favorite picks right now in the market?
Yeah, so like already I've discussed many stocks apart from the market view that we are looking 17,777 to 17,850 in the Nifty now and 18,500 is a positionally if someone is looking for the firecracker on the Diwali. Now talking about stocks, Tata Motors we have recommended. So one can go long here. The auto sector is positive and here we are witnessing small consolidation breakout in the bullish trend along with surpassing of falling trend line. So one can buy with support near to 462 for target towards 500 zone in the Tata Motors. BL is other name where we have the positive stance. One can buy with support near to 280 for target towards 300 level. So Tata Motors, BL, these are the couple of names could be in the radar. If someone is looking for the non-FNO counter, then I'll talk about the JK paper. This is one of our preferred pick given a Poland flag breakout on the daily scale. So one can buy this stock at current level or add on any small dip with support of 405. And here we have final target of 444 and 485 kind of levels.
All right. So 3 stocks, BEL, Tata Motors and JK Paper. How's Hindalco looking, Chandan? I just want to also understand how it could react today. Another big earnings candidate from last evening.
Exactly. So you are keeping the right stocks on radar and that really helps to the viewers. So yes, we also have the positive buzz in most of the metal name. However, this is because of the short covering, but prices are likely to inch up. We have seen good trading attractions as volumes have gone double to triples to the average daily volumes. And it has managed to surpass its multiple barrier of 428, 432 zone. So because of that, some uptick could be there in the Hindalco. One can look for buying activity with support near to 428. And you can see some short covering which can drive it towards 455 to 460 kind of levels.
Okay, Chandan, thank you so much for sharing your views on the market, different stocks and helping our viewers out with their queries. Always great to have you on board. With that, we're going to wrap it up on the show. Thank you so much for watching, but stay tuned. Santo and CJ are coming up next.